However, we will ask Amisha Vora, Joint MD of Prabhudas Lilladher, to come in and comment on this and more. Amisha, lots to speak about, including the market mood ahead of the budget. But since we've just brought out an exclusive piece of news, good morning to you. Let's talk about this. Demerger of the road assets unit may look at an IPO, strategic stake sale. It's a company that has been saying this for a long time. I don't know how closely you look at SREI Infra, but if you do, could this be a positive that the company was looking for?
So I think, I do look at SREI Infra, and after their first major action in terms of divesting their telecom assets and unlocking the huge capital that was blocked, this was the second move to unblock the capital and give a further push to their ROE. So I think there will be 3 to 6 months time by which either an IPO or a stake sale would happen. But I think that looks like a certainty because their assets are, quite a few assets are operational, and there is a possibility of unlocking value there. And in turn, they would not only in the SREI Infra get some equity unlocked, but the debt will also come down. So I think it will make a difference of almost 400 crores to their own balance sheet. So it should be positive.
Okay. Well, 3 minutes to go. Everyone is talking about Idea, and Amisha, let's talk about the big deal which is brewing in the market, Idea and Vodafone merger. We can't comment on the structure right now because we don't know the structure, but what we know is that a telecom behemoth is going to get created. Does that make telecom companies slightly more profitable? Is it time to buy some of these beaten down stocks? Can they still make more money, another 20-30% in 1 year?
So, but the beaten down stock, apart from even Idea, where there will be some promoter infusion and then they are consolidating, even Bharti yesterday moved up by a huge margin, 17-18% if I am not mistaken. And I think that yes, consolidation is definitely good for the industry. But I don't think in that short term, that is 6 to 8 months or 12 months, profitability is going to come back. That is going to still take little time. So I would say that after the recent run-up, I would stay put or hold in case I have, rather than further buy.
But Amisha, I want to specifically talk about ICICI Bank. If Axis Bank is a queue, then are we in for more bad news from ICICI Bank? Because again, this is one bank where markets have not been able to judge their book quality. All the good exposures, but those good exposures which were committed in the previous cycle have become NPAs, and NPAs are not recovering.
So I think ICICI also, as what we know, has a huge corporate book and linkage to some of the large as well as mid-size corporates across infrastructure, steel, etc., which are the pain points in the economy at the moment. But comparatively, I still feel that they are better placed because some of the largest exposure like Jaiprakash, SR are falling in place completely. So that is not going to give them worry. I don't think they have a very huge exposure on Alok. They do have, but not very huge. And steel as a sector is coming out is a big plus overall. So I think ICICI, according to me, should be better placed comparatively.
Amisha, are you pleasantly surprised with Bajaj Finance and the commentary thereof? Of course, in about a few minutes, Sanjeev Bajaj will be on the channel to talk about both Finserv and Bajaj Finance too. But happy with what they've done? I mean, the point is it's just about 10% off its highs. Even if you are happy, is it a good stock to invest into afresh?
I'm absolutely yes on both. I'm extremely happy, and yes, I think it's a good stocks too. Expensive but good stocks, because I think the way demonetization has helped organized sector, Bajaj Finance being able to fund that organized sector and the organized sector purchase of whatever ticket, small, medium ticket buys, is also extremely well placed to grow during this phase which is upcoming in India over next 2 years. If you see one more small company, V-Mart, they are also organized retail player and they've come out with excellent top line and bottom line and margin numbers. I think that reflects very well on where we are heading towards, from unorganized to organized, just by demonetization. And as we now pick up on GST, I think some of these, particularly VMart and all, could be good play, but Bajaj Finance I feel will be a good play also, because looking at the way they mine data and the approach and access customers, if with so many accounts across India has now got that balances of 50,000, 2 lakh, whatever, 2.5 lakhs, and then there will be some record built. So their target population, target audience will also grow multifold as compared to what it is now. So I continue to remain bullish on that.
Amisha, it's interesting to hear your views, A, on ICICI Bank, and B, the fact of the matter that, much population of market experts do still believe that, the best way to be in banks is to stick with the private lot. But you like SBI and Capital First. Why are they your top chosen picks?
So SBI in particular, because we think that in terms of asset quality, in terms of their ability to target and retail distribution and retail loans, retail products, and their aggression in digitization, all is matching private banks, in most of the parameters. So I think, and as the overall asset quality cycle in India over next 2-3 years improves, they should be very well placed, though they have a good corporate exposure also. Plus some of their subsidiaries are also equally and more valuable, and market I don't think has fully valued it. So we think that they have a good scope further to do very well. Capital First is a smaller version, I would say, of Bajaj Finance. They are also into funding of consumer demand, and they've been also growing very aggressively. Very neat book in terms of, clean book rather, in terms of provisions, etc., etc. So I think that even that space and that company should do very well. They'll continue to grow at CAGR of more than 30%.